TradeSpoon. My name is Vlad. I'm CEO and founder of TradeSpoon, and today I'd like to go over current market conditions and trade of the day after the Fed decision and ECB decision. Market remains volatile. Disclosures are very important. Please read them. If you're new to trading stock and options, I encourage you to visit this link on your screen. You can always pause the screen if you need more time to read the disclosures. All right, let's take a look. First, let's take a look at the market. Two-year yield remains weak after the Fed decision. Big drop in two-year yield. Again, a discrepancy between the Fed target rate of 5% and that they will not lower interest rate this year versus two-year yield at below 4% and continues to remain weak. We do have a little bit of steepening of the yield curve today and weak dollar causing the QQQ and spiders to continue go up. Not much has changed. We're still trading at around 402 overhead resistance. That was the overhead resistance going back to the beginning of the March. So 402.5 is your overhead resistance. 392 is your support. Lately, as the two-year yield continues to drop, spiders is giving up some of its gain, but nonetheless, pretty good rebound from yesterday's sell-off. It's all about two-year yield. As long as the yield stays below 4%, I think the rally will be capped, and you can see silver and gold miners continue to rally. So again, kind of a classical recession trade. From the inflation trade, we're moving into a recession trade where flight to safety is reflected in gold and treasury market. I continue to trade silver. I did close my silver position. I think silver short-term is extremely overbought, but I would be a buyer on any pullbacks. And in terms of YouTube, please join us for live discussion every Wednesday, morning bell and closing bell, and tomorrow strategy roundtable at 9:30 a.m. Central. So please visit us then. That's all I have for today. Keep an eye on two-year yield, keep an eye on the dollar. Again, a lot of uncertainty in the market that was reflected in Fed speech and credit tightening conditions, right? So all eyes on the next, I think the next trigger would be earnings season. So middle of April, but until then, I think market is just going to trade in the range. Potentially, we can break 402 to maybe 410 level, 407 level, and then on the downside, I think 380, 390 level will also stay intact going into middle of April or end of April. That's all I have for today. Thank you very much, and have a great day.